Today's Wednesday, May 25th, 2022. We're embarking on our first fiscal 23 budget deliberation. It is a special meeting agenda. Attending are Commissioners Duncan, Brooks, and Filios. We do have Carlene and Bill Brooks on the line. Do we have any changes to the agenda? Hearing none. One item, and it is the fiscal 23 preliminary budget. This is Brandy's debut, and I want to just try to set the process straight. This presentation is really for the Board of County Commissioners, so we're not going to be entertaining any questions during the process, largely because we have to get through it. It is the first of its type. There'll be plenty of time for that later, but we want to give Brandy an opportunity to present what she needs to present so we can launch this process. And without any further ado, Clerk Jim Brannon, please.
Thank you, Chairman Filios, and hello, Bill.
Hello, how you doing?
All right. Anyway, I just want to thank you. Brandy, you want to stand up and wave to the crowd. Brandy is our new budget accountant, and many of you have communicated with her via email, but she will be in charge of bringing the budget forward to the commissioners, and we will be making adjustments as they direct us. Today's meeting, as Chris Filios has said, is just the kickoff meeting. And one thing I would like to remind you, this year, the auditor team will not be establishing meetings with the commissioners for individual elected office officials or department heads of their division. So if you fit that category, you should reach out to Leanna Kaiser and schedule meetings with Bill, Leslie, and Chris, and that's how it will work this year. So this will be my last budget to present, and I want to make this commitment to the commissioners. Whatever you need, the team is here for you. Please let us know if we're not giving you what you want. And with that, I will turn it over to the aforementioned Brandy Bell.
All right, good afternoon, Commissioners. As Jim stated, we're just going to do a high-level review of where the FY23
Can everybody hear Brandy? If you cannot, please raise your hand. Yeah, it's on.
It is on.
Okay, you're good. Just bring it a little closer, maybe. There you go.
Is that better?
Yeah.
Okay. We're just going to take a high look at the FY23 budget where it sits right now. First and foremost, we do want to give a big thank you to all the budget admins and staff, budget officers out there who did put in a lot of really hard work getting their budgets into me, and I do really appreciate all the effort they did. So today we're just going to review the main elements of the preliminary summary, which you do have printed in front of you. That just gives a snapshot of projected revenues, where we're at with our current expenses, and then new requests from the departments. There are two scenarios on there that I will cover here in a minute. We'll also touch on the timeline for our budget deliberation meetings over the coming weeks. And lastly, we'll open it up for board discussion and next steps. So this is the preliminary summary. The board does have this printed as a copy. The two scenarios presented here, the first is if you were to take a 0% tax increase and 0% M&O. The second is if you were to take 3% tax increase, 0% M&O. I'll draw your attention to the red number at the bottom right-hand corner in both scenarios. That would be the number you would have to cut from the budget for us to be balanced. We do have analysis on many other scenarios for revenues, including some stuff with foregone, different percentages if you wish to look at that later. I will explain really quickly what M&O is. M&O stands for maintenance and operating. It's a result of a House bill that was passed last year. It's another way for the board to consider taking foregone. You would be taking 1% if you chose to do that. We do have that at 0 right now, but if you're interested in looking at that, of course, we're happy to provide that.
So when you talk 1%, that's about 500,000?
Yes, it'd be about 560.
Okay.
So first, we'll just jump into our revenues. First, our property tax revenues. Those are fairly certain and simple for us to project. They will vary at the board's discretion because that is where you decide what percentage we take. If we look at M&O or foregone, you will also this year be faced with the decision of what to do with our URD return increments. The unknown elements of our property tax revenues, one of the main ones is House Bill 735 affected public defense funding. Essentially, the state is taking away our ability to levy for public defense costs. They're saying they will replace that money to the counties through a pool of $34 million they have currently. It will be allocated to the counties. The tough part is we will not know our portion of that until late July at the earliest. So right now for our revenues, we've presented them as if we're still going to levy one more year for public defense, which we are allowed to do one more year. Once we get that sales tax number in July, we can bring that back before the board and you can decide if you want to reduce our levy for public defense and backfill that with the sales tax revenue from the state. Another unknown for us is going to be the new growth number. Right now we have just a very rough guesstimate of that in there. We will not have that final number until the end of July. That is fed through internal statutory deadlines between us and the assessor. But bottom line, final number will be end of July for that. And then something new this year, as I mentioned, the board will be deciding what you want to do with the 2 URD increment returns that you have available to the county. You can either choose to take them as what would essentially be a revenue stream, or you can return them into the property tax base, reduce the levy amount to the public. That amount right now is conservatively estimated at about $985,000. It could be a little higher, but that's what we're comfortable with for right now. Moving on to non-property tax revenues, those are more fairly certain. Those year to year, that's really all the fees charged by various county departments. Our revenue sharing is also in there, liquor apportionment, payment in lieu of taxes, and interest income. As far as fees go, I will say that is where the board can discuss fees with individual departments during their presentations to you. That's the time and the place for you to be asking them about increasing or decreasing fees. And then lastly, we do have some revenue from restricted fund balance. Most of that is going to be E911, county assistance, and our health district. And moving on to our current expenses, we do want to touch on the Panhandle Health District funding. That did change as a result of House Bill 316. Essentially what that did is the county's burden of funding the health district has doubled from $800,000 to $1.6 million. We are levying the $800,000 we have always been responsible for, but this year the full additional $800 and change that is added expense to us is being this year funded through county assistance. That is just a temporary fix. Long term, the board is going to have to decide how they're going to make the transition to levying that amount. Next, current personnel expenses for the county. Right now, loaded personnel costs are $74.2 million. That is your FY22 amended budget, plus any mid-year changes that have occurred. And I will clarify, that does include budgeted open positions, and those open positions are budgeted at 100%. Last year, the board chose to fund certain open positions at 50%, but for FY23, we're gonna start at 100 because we don't want to assume the direction the board wants to take with that.
Okay.
So those open position costs are sitting at $6.6 million. The total $74 million is up $4.8 million over last year by 7%. The average payroll cost to the county right now is $2.7 million every 2 weeks. And the most recent estimate that we received from Alliant for the increase to our health benefits is going to be about $600,000 for FY23. That's a little over 5%. We will get more clarity on that when they present to the board on July 13th. And I do want to mention that mid-year changes going forward, such as the ones we had at the HR meeting this morning, will continue to move and affect that $74.2 million until the cutoff, the first week of July. After that pay period, the first week of July, no more changes after that are going to flow into the FY23 budget. I believe that's what's been done in the past. We just have a cutoff date and no more changes because we have to be able to balance the budget. And then our operating base budget right now is $29 million. That's the FY22 adopted balance. No grants are included in that. And then the department requests for FY23 right now are $2.7 million, which would increase that 10%. And then capital expenses, this is just a little snapshot showing the board what was spent out of assigned fund balance for capital purchases this year that were not initially budgeted. So that $470 for the rubric backup for IT, and then the $450,000 for the 8 fleet vehicles purchased, and then recently $2 million was approved for 25 patrol vehicles. And now moving on to new requests for next year's budget. So for personnel, we had a total of 39 requests for brand new positions that came to a total loaded cost of $2.7 million. That does not include onboarding costs for those new positions. Total onboarding costs for those 39 positions come to $1.7 million. And then requests for changes to existing positions, we had 46 of those. They came to a total loaded cost of $470,000. 18 of those requests are purely grade and step increases. That does not include position conversions, which a lot of conversion requests also involve grade and step changes. So in total, all personnel requests came to $3.3 million. Add on top of that, onboarding costs of $1.7 million. And then wage market adjustments. We have a placeholder number right now in the preliminary summary of $6 million. This was provided to us by HR, and they are going to be diving into this in detail. Keith and I honestly can't really answer questions about that today. That we don't know. That's going to come out to everybody in the personnel presentation on June 14th between HR and BOCC analyst Nancy Pluff. So that is going to be baked in any personnel increases as a result of wage studies. And like I said, that will be presented June 14th. Bottom line, personnel requests are definitely going to be the largest expense factor to consider in this year's budget. New requests for operating expenses and capital. This is pretty straightforward. Operating expense requests total $2.7 million over the FY22 adopted budget. $2 million of that is for general government, $700,000 for solid waste. We do break those out for you just to remind you that solid waste is an enterprise fund and will fund all their own requests. Capital requests came to $6.3 million. That was $3.7 for general government, $2.6 for solid waste. And then just to touch on the timeline for our budget deliberation meetings coming up. In total, the board has 5 meetings with the auditor's office to get the budget balanced. That gets you to July 12th. July 13th is the presentation from Alliant Benefits, where they will go over the expense increases for our health insurance, and then July 15th, the board can meet to make that last adjustment. They're going to decide if you want to have the county cover that increase, if it's going to be passed on to employees, or a combination of both. And then really after July 15th through August, the auditor's office is working on finalizing revenues, fine-tuning the budget, making any small adjustments needed. We really are waiting on our net taxable value, which we'll have the first Monday in August. That is what we use to calculate our preliminary levy rate, which will affect property taxes and those tax revenues. We arrive at that in conjunction with the assessor's office. Same with our final new growth number. Using data we receive from the assessor, we will have the final new growth number by the 4th Monday in July. And then, as mentioned earlier, the unknown sales tax distribution for our public defense funding. We're hoping we will know that towards the end of July, but it could be later, but we're hoping for July. And then August 15th is our statutory deadline to have published the budget and the hearing date. We try to publish it twice just to make sure we're covered there. And then we have our public budget hearing on August 31st. And then at the business meeting on September 6th is when the budget will be adopted. And then just an overview, how do you balance the budget? So the budget is made of 2 pieces, revenues and expenses. You can decide how much revenue we're going to increase or decrease. That is done through your percentage increase you choose for property tax. As mentioned, you're going to get to decide what we do with the URD increments this year. M&O is a new thing for you to consider, the 1% foregone. As always, you have the 8% foregone. Fund balance usage will come into play if you decide to fund capital requests with fund balance, how you can work that out. And then fees, your discussions you'll be having with departments over their fees and projected revenues. And then obviously you have cuts to consider in expenses. Personnel is the largest, and as I mentioned, that meeting will be June 14th when we'll dive into that in really deep detail. We can provide a lot of analysis, as the auditor's office has done in the past, comparing requests for new positions from departments to what positions they have open in that department of the same position. We can also provide analysis what it would look like for the board to fund certain open positions partially at various percentages, anywhere from 25 to 75%. And obviously capital requests are an area that can be cut from the budget as well. And if there are other areas the board wants us to look at, we're more than happy to dive into that. In addition to the budget meetings the auditor's office has scheduled, the departments also have the opportunity to meet with you and present their meetings. Oh, I apologize. So this is our budget deliberation schedule first. So today is the kickoff. Next week we've designated for our capital items. Week after that, personnel. Week after that, operating. There are 2 meetings, June 27th and July 12th, that we've left open in case the board has something else that they want us to dive into, or if one of these first 3 main meetings needs to spill into 2 perhaps. And if we don't need them, we can always cancel them. As mentioned, July 13th is the Alliant Benefits presentation. July 15th is the final deliberations meeting to make that final health insurance adjustment. And then August 1st, we will present the balanced budget to you. August 15th is our deadline to have published the budget twice. August 31st is the public hearing. September 6th is budget adoption. And as I was saying, departments have the opportunity to meet with you and present their budgets. This is what I have so far for the various departments' schedules. I just pulled this from the BOCC calendar. I would encourage departments to take it on themselves to look at the BOCC calendar or call Julie or Liana to make sure that they have the same time and date that the BOCC does. And we would also ask that you make sure the auditor is at these meetings. It's important for us to be there as support, both for the board and the departments, to answer questions, and also to keep track of any changes or the board direction on requests. And lastly, we'll just open it up for board discussion, questions. If you have analysis requests you want us to dive into, and take it from there. Thank you.
Okay. By the way, that was outstanding.
Oh, thank you.
Good job. Outstanding. Anyway, yeah, I do have a question. The 6.2 million deficit,
Yes,
does that include the $6 million placeholder for wages?
it does.
Okay.
So you can see down at the bottom under proposed increases, wage market adjustments.
Yes.
Is that 6 million, and it's prorated.
Oh, yeah, there it
between-
is. Okay,
Yep,
okay.
between general government and
Yep,
solid
yep.
waste. Yes.
Okay, thank you for that.
Yes.
Leslie, questions?
We just are going to have to keep in mind about public defense and health districts.
District.
So, yeah, so that health district piece of that 800,000, so we're already taxing for 800,000 of it. The other 800, we could potentially do ARPA funds, or we can do it out of the charity levy, indigent fund balance. And I probably would suggest that we consider doing indigent fund balance for this year, but and keep the conversation going for what we're gonna do next year.
Right.
Because I think we've got 3 years, and then that will be depleted. So we will need to figure out how to come up with another $800,000 to pay for that. You're Mike, thank you.
We're still bringing in revenue on the indigent side, but it's not
Right.
enough to cover the full 800,000.
Right, the revenue they're bringing in covers their people to bring it in and extra.
Yeah, 350 we have budgeted for that.
Okay.
Bill, questions? Comments?
No questions. I just thought, I thought that was one of the best presentations we've ever had to the Board of Commissioners on our budget kickoff. And I really appreciate the work the clerk's office has done on that very much.
Thank you.
The thing that does strike me is that, and maybe to some degree, the presence of the ARPA funds, is we've got some flexibility this year as to how we treat the new building. Some of it could be fund balance. What's in there now that we're looking, what is it, 7?
I think 7, because we took the 2 million out for cars.
Okay. So whatever's left, that's a possibility, which reduces the reliance on the ARPA funds, which makes some of that money available potentially for premium pay or other applications. And of course, whatever revenue sharing the state comes through with obviously the liquor sales, the sales tax. So we've got some flexibility, but the visibility will increase as we go forward. So I'm actually looking forward to this budget season. I think we've got I think we can correct some deficiencies that we've had in the past, particularly in the area of wages.
Chris, just to let you know, we have talked to Seth at IAC, and we talked to Tony at the liquor division in Idaho. We do have that projection. Obviously, it's rough. As we get closer, we'll get hopefully a better estimate on that. But right now, we've taken the last 4 quarterly payments of our sales tax and revenue sharing, and we have it times by 7%. So you guys will have to make a decision, based on the economy and where you think things are going. Do we want to keep it at a 7% increase over the last 4 quarterly payments we've received?
Okay.
And same thing with the liquor apportionment. We are increasing our magistrate side of the liquor apportionment. We're hitting the full 15%. So that's going to offset some of the costs there in district court we never had before, really, in revenue the last few years.
So the challenge, I think, is as I look at this, if we were to take the full 3%, we still have to work off a $6.2 million deficit.
Yep.
Chris, I'd like to make a
Sure.
comment too. One of the things that largely gets glossed over a lot of times is the fact, and it was contained in the presentation, our current open positions
Yes.
are $6.6 million. And people always say, how do you build a fund balance? Well, there's your answer.
There's your answer.
And that is a big determination of how the board wants to fund those positions.
And even with a projected slowing economy, what's the likelihood that we're going to fill every one of those 97 positions? Highly unlikely.
And that's the other thing too, looking at the new positions being requested, how many of those departments have unfilled positions
Well,
going
there you go.
forward? So I do know 2 departments who are full who actually need new bodies. And so I don't want to just blanket,
Right.
new positions. We'll need to go department by department. But
Absolutely.
I think we're going to get done in record time this year,
Great.
because this doesn't even account for fund balance use.
Precisely.
Capital projects or capital.
Yep.
things.
And the other thing, the 2 examples we have provided here on the board today were given to us by our liaison. So if Bill wishes some other scenario, or Chris, if you do, we'll simply generate it because we've got it all set up.
Yeah, I think there's at least one additional one in the folder. So I didn't see if all 5 were in there, or just 3 at this point.
On your drive?
Yeah.
Yeah, I can provide you with all the scenarios we have, foregone everything if you'd like.
I think this is good initially because it brackets. We're looking at 0, we're looking at 3, and the other option is basically something in between.
Right.
But I think, and I have to second what Leslie said, I think we're going to get through in record time because I don't know that this is probably my 6th budget season, that we've ever had as many potential options that we have right now. And to a large degree, ARPA. Because it's giving us a level of flexibility as to how we use those funds, especially that first 10 million, which is essentially, I don't want to say free money, but minimally accounted for, that we can tap in addition to our fund balance. So we've got a number of options ahead of us, and I think that's a good thing. Bill?
Nope, I think it's been covered. Thank you.
So I think the only other thing I want to address, and I think we'll bring it to a business meeting or the next HR meeting, is mid-year requests. I want to
Yes.
really nail those down and really say, okay, only in these particular circumstances and not widespread.
Yeah, because
Anyone?
we've been managing by exception.
Yep.
And we need to get away from that. Does anybody wish to add? Brandy, anything you want to add? Keith?
Are there any specific analysis you're looking for us to do between here and the next time we meet?
Right. Next time, we're going to be talking about capital requests.
Right.
Yeah, I don't see any right now.
Okay.
Sylvia, is there anything you wanted to add?
Not at this time, we're still doing our analysis.
As far as capital requests,
Okay. What was that, Bill?
No, he's watching.
I said, were you asking as far as capital requests?
Go ahead. No, that's fine if you
I
don't have,
said, were you,
go ahead. Anyway, let's move on. Okay, so I think we've got a good synopsis here. Good job. Very good job. Off we go. Thank you, everyone. I've got 128, meeting adjourned. Thanks for attending.
Good.
Go ahead, take that.
Through his stuff.
Yeah.
I think we're trying to provide that too, so you guys can see.
No, I have it upstairs, but,
Would it
in
be
that-
here?
She had a brief slide on it. Well, is it in the folders, Jennifer? So we can get it out of the folders.